Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu, making it 5 o'clock in New York. It is the 19th day of September, Wednesday, 2012, and this is the daily report for gold and silver. Interesting day in the marketplace. We'll talk about the particulars in a second. As we currently stand, as you can see, 1770 and change. That puts it down about $1.50 on the day. It has had a low today of 1761, and a interesting high because we've had a high of 1780.60, and if I'm correct, that is a record high over the last few months. Very interesting. Silver also off right now about 16 cents on the day. And as you can see, current print is 34.57. It has had a low of 34.20 and a high of 35.09. Traders, interesting day in the marketplace today. You know, as you can see, we're trading off a couple of dollars, but we did hit on an intraday basis that new high. That new high was very interesting, but what you can see is we've got this real push-pull scenario going on currently with gold, in that we've had dramatic sell-offs in the crude oil market. Typically, as the crude oil market goes down, that will put underlying pressure on gold because it is considered to be less of an inflationary statement. As oil goes down, basic cost of living goes down, and therefore it's less inflationary. At the same time, we've had the dollar, and that has been trading under pressure, and that, of course, is a little bit lower today. So as you can see, currently at 1769.62. As we talked about yesterday, we're going to maintain our stops. I'll probably want to pull them a little bit tighter through the week. But the key right now, as far as I'm concerned, let me see if I can line this up as straight as possible, and that's not that straight. It's actually right around at 1802. And as you can see, intraday high, 1780, roughly in that area, but still about $20 shy. My question is we can see by no stretch of the imagination that as this market broke up, we have had a series of what I like to call release valves. A release valve simply is where you get the market come up, and then it either goes sideways, corrects, and you're getting these small corrections, and that's really releasing it. Now, why do I bring that up? Because as the market goes up and then goes sideways for a little while before kind of generating a little bit more energy and then moving higher, it lessens the likelihood of any kind of a parabolic or really, really strong meltdown in the market. Typically, when you have the markets move straight up, that parabolic rise straight up, you will get, at the same time, an incredible fall down. And that's something you always want to be cognizant or aware of. Now, the other thing that I do want to look at today, this is, of course, our moving average convergence divergence. I'll highlight that right now. And what you can really see when we take a look at it is they've gotten to a point where, let me draw on this lower line right in here. Actually, I'll go ahead and erase it, make it easier for us. And you can really see that it appears as though it might in fact hook. You can see how it's come down and it's getting closer to really crossing this line. And that, of course, would be a sell signal according to the MACD. However, at the same time, what you want to notice is this is really not the first occasion that that's actually happened, because here's our lower MACD line right down here. And as you can see, the market came in, it touches it here, it touches it in this point. It doesn't really come quite there here. And once again, it's going closer. In other words, it's really, really coming together. Does that mean it's going to cross? Typically it does. But as I mentioned yesterday, when we're looking at a market that is extremely overbought, and this market is, there can be no doubt about it. We've seen a dramatic rise off of a bottom, in essence, call it around 1560 to 1580 right in here. These are those lows that we achieved when it was below 1550. But even if you start your rise, as I said, from around the 1580 point, either here or even here, once it really broke above these tops, and that was the area that we were really looking at to make a determination, and I believe that's 1536, excuse me. 1536, the market really took off, and it took off running. But we've had these periods of rest or consolidation in between, which has kind of given us a option to see the market really genuinely move higher. Also, when we talk about the fundamentals in the market, we're looking at a protracted move, and this protracted move is going to be through the end of this year and probably into next year because the Fed has an open-ended monetary policy, something that's a bold move, not heard of before, but is going to affect the market for a long time to come. Lastly, I just wanted to take a quick look at silver. As you can see, it appears as though, at least on a tentative basis, that it ran into some resistance right at 35. This is that 35 mark right in here. That has been our intraday high. Now, if we kind of carry that line over, we're going to be looking for historical areas in which the market did find that to be either supportive or an area of resistance. And really the only area that we can see shorter term over the last few months is this area right in here. This, of course, is also, when we take a look at the market, happening just at the end of last year. And what you can see is it was true resistance there. And now the question is going to be, will it be resistance once again? Will it take a stab for these tops right here at 37? Or will it find some sort of resistance and back off here first? That's something only the future will tell. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.